Thanks so much for joining everyone today. We are day 6 of Reboot and Thrive. And again, I'm Christopher Nelson with Wealthward Capital. We help technology employees and entrepreneurs create passive income portfolios. And I'm really excited today. I'm joined by a mentor, a business partner, and a friend, Joe Fairless, who is going to walk us through how he's managing his portfolio during these challenging times. But Joe, why don't you just take a couple minutes, and I know a lot of my listeners are friends of the podcast, but if you want to just give 2 minutes on who you are and what you do, that'd be great.
Who am I? I am focused on the people who come across me being better off than if they didn't. That's my focus in life. On my tombstone, that's what I wanted to say, maybe a little more eloquently than what I can say, but
Yeah.
maybe in calligraphy or something, if that's still around. But ultimately that's who I am. I want those who come across me to say, you know what, I'm better off having known or talked to or heard from Joe. My focus from a business standpoint is apartment investing. So yeah, I do have you mentioned the podcast. I do have a podcast. It's the world's longest running daily real estate investing podcast. Interview real estate investors, get their best real estate investing advice. I've done over 2,000, well, there are over 2,000 episodes.
Wow.
That have been released. So for the last 2,000 days, an episode has been released Monday, every day of the week. Now, I haven't done all of those interviews. I'm starting to scale back on the ones I personally do, but I've done 90% of them to date. And then I'm the co-founder of a company called Ashcroft Capital. We buy apartment communities, and we have almost $1 billion worth of apartment communities under management.
Thanks. No, and thank you so much for taking the time and joining us here today. So I think that, the topic, thinking about Reboot and Thrive, and I think that you're, a person that I seek advice from a mindset perspective, the way that you manage your business, and then also the way that you think about multifamily, not just about these assets, but also about communities. And now this is a time where we're all being called on by this reboot that we're all going through. And so what I wanted to dig into a conversation with you today is, what are the steps that you're taking to navigate your communities and your assets through these challenging times?
Well, I mean, the number one thing, and this is not only the communities, but it's the business. And the number one thing is we got to make sure we take care of those who we need to take care of. And so we need to identify who do we need to take care of. And we need to take care of our investors. We need to take care of our residents. We need to take care of our business partners, our employees, and that's from a business standpoint. Obviously, we're talking about personal relationships, family, and loved ones. That's another category of who we need to take care of. But from a business standpoint, that's who we need to take care of. So first, it's pretty intuitive, right? Who we need to take care of. But once we identify consciously or subconsciously who we need to take care of, then we need to identify where are the risk factors for those who we need to take care of. And everyone is concerned about what is a unique challenge to them. So residents are concerned about, in some cases, paying rent, or what is the situation if I have a emergency maintenance request. Investors are concerned with what's the status of my investment. Employees are concerned with what's the status of my job. And so it's important to be in tune with everybody's unique concerns, because in order to be effective at addressing those concerns, we have to be aware of what those concerns are. And I'm simplifying the concerns for each of those three categories. There are certainly other challenges or thoughts that people in those categories might have. But those are some of the big ones. So what we do is we don't make any rash decisions, and we don't communicate for the sake of communicating. We have conversations internally among our team and with our team members, specifically our property management companies, and we make sure that we have a plan of action. And um, you know, one thing that we want to make sure that everyone is aware of is the safety component
Yeah.
of any disaster or any pandemic. Who thought we'd be talking about a pandemic a year ago? Any
Right.
pandemic. So yeah, I'll tell you that we owned a property, actually two properties in Houston during Hurricane Harvey, and they were not directly hit, but I think it's Hurricane Harvey. I'm
I
pretty
think,
sure it
yeah,
was.
you got
Yeah.
it.
Okay. Thanks. They weren't directly hit, but they were impacted because there's a little bit of flooding, but there clearly it was in the news. So our investors were wondering, hey, what's going on? And we had to make sure we were communicating properly. And then, as an interesting a side note to that, even if your property is not directly hit by a hurricane or by a natural disaster, if the area around it is, you're going to be impacted most likely in a negative way because the cost of construction and labor will likely increase. So your budget can be thrown out the window, at least in the near term, because there's going to be so much demand for projects
Right.
and so few skilled labor to get that done. But when that happened, we first communicate, and when this pandemic is when we realized, hey, we need to address it. The first thing we do is we communicate the safety component. So we make sure that we've done all the things at the apartment communities that it's likely other owners are doing, or hopefully they are doing and have done, shutting down the common areas, making sure that the residents are aware of the CDC guidelines and where to get information, and sanitizing, different aspects of the community. We have a whole page long list of things that we've done, but we're communicating that to the residents. And on with the investors, we also communicate with them what we're doing at the property. Then also there's obviously another layer to that, and they're wanting to know, well, how's the overall performance of the property
Right.
relative to what it usually does. And you and I are having this conversation on April the 3rd.
Right.
So, you know, it's not even 3 days into the first of the month, so we can't have a substantive conversation about performance. Although we certainly have been tracking where we're at now on 2.5 days into the month
Right.
compared to where we were on average for the last 3 months. And so we can look at that data, but it still needs to play out a little bit more. And so what we did, knowing that it's just not to anybody's benefit to give daily updates on the performance of collections,
Right.
because it could, just like the 24-hour news cycle, it can cause unnecessary alarm or comfort if something's going up or going down at that moment in time, when really we need to look at a certain period of time. So we just said, hey, here's all the stuff we're doing at the apartment communities. Here's our plan of action, and you'll get another update in our monthly update, which I send out every month by the 14th of the month. That way, it gives us time to assess out the situation. And I think
Yeah.
when anything like this takes place, which hopefully it never happens again, but who the heck
Right.
knows?
I know.
It's important to first communicate, acknowledge that we understand there is something happening, and here's what we're doing now. So you acknowledge what's going on, but then also you do not uh, attempt to speculate on what may or may not happen. And I was watching, there's a new show on Netflix last night. I couldn't fall asleep. And
Don't say it's like the lion guy.
no. It's not that one. It's how to fix a drug thing. It's with drug testers in Amherst, Massachusetts.
Huh.
These two women were actually like, I think, taking the drugs that they're supposed to be testing.
Okay.
And so I'm on episode 1 of a series. I don't know how many episodes there are, but one interesting thing in that is there's a press conference, and the Attorney General for the state of Massachusetts, she made a mistake in the first press conference because, and this was an analysis. This isn't me analyzing it. This is commentary on the show analyzing. Right. They said what the mistake she made is she said these two individuals, they're allegedly, taking the drugs that they're supposed to be testing, but we're pretty confident that it didn't affect any of the other cases that they were testing. Well,
right.
If you're busted for drugs and you get it tested through a laboratory, and that laboratory is then consuming those drugs and then replacing it with fake drugs, that's a good out for you to get out of jail. And so what they said about what her mistake was, hey, you're in the initial press conference, you're supposed to simply state the situation as it is currently and not
right.
speculate on information you don't know about.
Right.
And so that's what we did. And I hadn't seen the show. So fortunately we followed that rule because I just watched it last night. But and we sent out that email a while ago. But first we did that. And then we said, and we will provide another update and it was about 3 weeks. And so we're providing another update in a couple of weeks. So that is the process that I believe we should all take. Communicate the safety component, and then communicate the information that you know. Do not speculate, but acknowledge that you understand the situation.
Great. Yeah, and I know, having been a recipient, having been part of that communication, I know that, you and your team have been very diligent in communicating, not just to the tenants, to the property management company, and then also to your investors. And so as information is coming in, and I know also as you get a lot of experts on the podcast as well, what are you seeing, broadly speaking, as some of the, the levers or the opportunities that, multifamily, managers, operators have at their disposal moving forward to help navigate through this?
There's a list of resources for residents who have financial hardships,
right.
Who can verify financial hardship to apply for that. I am not well versed in what those options are. A property management company is, and we have
right.
a document that we provide our residents, but I don't exactly know what those resources are. But there are resources. The point is there are resources, and there's specific questions that our management company asks the residents to confirm that there's a hardship, and then we work with them. I mean, we did not send out an email prior to the first of the month saying anything about rent, because everyone knows rent's due first of the month. But if someone has a hardship, we're human beings and we understand what's going on, and we'll take all the different factors into account, and we'll figure out a solution.
Yeah. And I think that, Regine was on Tuesday, and, she manages our personal portfolio, our active portfolio of, single family home and smaller multifamily. And she was saying the same thing, is, trying to make sure that all the residents have access to the resources, and that is also there. What are you seeing, and what are you hearing about the tool of forbearance, right? Because I've definitely read and heard, like, okay, it's there, it could be there, but it's also a tool or an option that should be, approached very carefully and with caution. Is that something you've heard about too?
Yeah. And we haven't made a decision because it's April 3rd.
Sure.
So we it's 57% of our portfolio is agency debt.
Right.
And 43% is private loans.
Mm.
So with private loans, they're private lenders. They can choose to do whatever they want. They'll probably, based on what we're hearing from our mortgage brokers, they're probably going to treat it owner by owner, property by property, and just kind of pick and choose who they work with and who they don't, or to what extent they work with people. But where our team's looking at it, our asset manager and the person who heads up our debt relationships, they're having conversations, but we haven't made any decisions on that.
Right. So it's a tool in the tool belt, trying to understand it. And I think, I'm hearing the same things too, that from an asset perspective, it's going to be a, building by building conversation, because everything in this scenario is different, because we're, at this, very extreme event that's affecting a lot of people at a very personal level.
Yeah. I think, it's what you said. It's looking at it on an individual project by project basis. It's not making a sweeping decision that has implications across the entire portfolio. I mean, we have about $1 billion worth of properties. I don't know what
You
the
can
current
round up.
total is. Yeah. But we have to, we can't pretend that Tampa is acting the same as Orlando, as Fort Worth, as Dallas. And then with each of those markets, as we all know, there are submarkets within each of the markets, and there's different pockets of employment. Orlando, tourism, not so much it's not happening right now.
Right.
But on the flip side, there's an older population in Orlando and in Florida in general. Therefore, healthcare certainly is doing, from a employment standpoint,
right,
it's doing well. And they're, you can make $200,000+ if you go to New York right now as a healthcare worker. They're trying to recruit people to go there. So, we have to take a look at it on a project by project basis. And if I'm an investor, which I'm our second largest investor in Ashcroft, so I guess I am, I'm a very large investor in our deals. I would want us to look at it on a project by project basis, because all of our projects are unique. We're not a fund. We are individual assets that we own with individual offerings. And so, we're going to approach accordingly, and we're going to use a common sense approach.
And what would you, and here we are, business partners, and we work together, and I understand your style, and this is something that I want to make sure and communicate to, our shared investors that are on this live stream. But what about, there are other people listening in that may be working with other operators? What would you advise them to do if maybe they're not getting the transparency, or they're not, receiving some information on what happens next?
Besides ask, investor. So I guess, I don't know. I don't know how to answer that besides tell them ask.
Yeah.
If you don't have the information, you just ask for it.
You got to lean in, get on the phone, understand what's happening. Yeah.
Right. Yeah. Sorry, I don't have a good answer for that one other
No,
than just
and
ask them about
I
it.
realized after I asked the question, I mean, I think
Yeah.
it's pretty obvious to ask for the information. I guess it's, and I mean, going through what we talked about, it's really, ask how they're communicating to tenants, because I do think that, you know, the one thing, and this is why, I've made a choice and I'm working with, boutique firm, like Ashcroft, and partnering with yourselves, because being below institutional, there's the opportunity to run a small business and to be focused on relationships. And I think that, again, getting back to this, is understand how your operators are managing that, because that's also going to be an indicator. If they're not communicating with you well, understand quickly how they are communicating with the renters, because
Yeah.
there are people right now that need understanding, cooperation, and people leaning in. Because I think, you know, one thing that Ashcroft does, and this is one of the things I enjoy about our partnership, is you're focused on building communities, right? You create
Mm-hmm.
events, and now I'm sure it's hard for people not being able to go to those events, because as I've been on site, been on property, and talked about whether it's the Taco Tuesday or the Nacho Friday, right? We're invested in creating communities where people are coming and living together and sharing lives.
Mm-hmm.
And so if you have a operator who's not communicating with you, number one, that's a flag. But lean in and try and understand how they are communicating with your renters and what they're doing. Because I think then, and this is one of the things I talked on Monday, is, now is the time for us as investors to be going through our portfolio and leaning in and understanding where is our personal risk.
Mm-hmm.
And that's because and this is where I want to take the conversation with the time that we have left, Joe, is now looking on the horizon. I think that, in real estate, we always talk about, okay, how do you navigate the valleys? Okay, we're in the valley, we're navigating that. But as we start coming out of this, what do you see as, and it could be too early to tell, even though I'd love to hear more. But what are you seeing as potential opportunities, or what do you, yeah.
Well, so allow me to speculate. So up until
Speculate.
this point, we've been talking about more concrete information and
Yep.
process and approach, but you've asked me about the future. So, warning, speculation time.
Yeah.
I don't think we're going to see a feeding frenzy of buying opportunities coming out of this. One main reason I don't think we're going to see that, at least to the degree that it was after 2008, is there's a lot of people sitting on cash, more so than going into the 2008 recession. And the people who are distressed and needing to sell, and the worst time to sell over the last 10 years is going to be in the next 4 months. So,
Yeah.
I mean, if someone has not already sent their deal to the market, and they, like, as of today is April the 3rd, if they put their deal on the market today through the next 4 months, there's something up with that deal. I mean, most likely something's going on.
Right.
Why in your right mind would you list your property for sale over the next 4 months, commercial property for sale over the next 4 months? Doesn't make sense. So there will be some opportunity, but there have been a lot of people who've been waiting for something like this to take place. And there's going to be a lot of cash chasing those opportunities. That's what I speculate. Now, could be wrong. We're talking about a crystal ball. Who the heck knows? But based on the conversations I've had, that's what I think is going to happen. Now, that is based on the assumption that people are going to be going back to work in the next 2 months, 2 to 3 months.
Right.
Now, if people are not working 6 months from now because we're still quarantined, okay, throw what I just said out the window. I don't know what the hell's going on. Like,
Right. We're in a completely different situation.
who the hell knows? But it based on the assumption that we're all going back to work, or people are going back to the W-2 jobs in the next 2 or so months. That's why I think. So the opportunity, well, you might find something in the next 4 months for someone who's listing it for sale. But there's going to be a lot of money chasing that deal. So really, the opportunity is being reaching out to owners directly and having conversations with owners directly to try and get away from the feeding frenzy that will be around the marketed deals that are needing to sell because their debt's up. They're not properly capitalized or something else. So finding off-market deals and uncovering those owners who are in a tight spot. But, how do you underwrite that like you have to either underwrite it to the degree where you set expectations with your investors, like, hey, here's what the first 2 years are going to look like, and it's not good, but it's a good solid investment, or you use your own cash and you're just okay with rolling the dice a little bit on what it likely will be. So there's a lot of unknowns right now, and the opportunity is going to be based on some of those unknowns becoming known, and then we can better speculate on where the best opportunities will be.
I get you. I mean, we're in fuzzy focus right now, and as the lens starts coming to focus and we're seeing some shapes, then we can start understanding. But I do think I would definitely concur with you in the sense that people are sitting on more cash. People saw this cycle going more long. People were exiting, other investments, other opportunities, and accumulating the cash. So I definitely see that. The other thing is, what I'm reading from a coronavirus perspective is this thing could, come back in smaller waves, less impactful waves, but we could see this, coming back until we got to a point where there is a, vaccine or something, that we could all have. So
wonderful.
Yeah. Well, I think at the end of the day, what I took away from this, Joe, is, and this is again why I really enjoy, being a partner with you is this is about building communities and taking care of communities right now. Mm-hmm. And so, we're in communicating with our renters, partnering with our property management companies to make sure that they can take care of themselves. They're in healthy situations. They can get all of the benefits. And then, as the data is coming at us, we see, levers that we can start pulling, but nothing is being pulled until more data is being brought forth and we can understand. And with a boutique portfolio, that is going to be asset by asset, building by building, what's going to happen there. And then I think, looking into the crystal ball, I think that coming out of this dip, you're right, it's going to be different than 2008. And so looking at every deal, understanding what it is, also looking at this horizon and saying, wait, where are we? Because a lot of people didn't predict this coronavirus is going to be as big as it is, right? Mm-hmm. So, I mean, understanding that is good. And so just, I want to close off with two more things. One with you is, what are you doing, to just thrive, mentally and to stay focused and positive during this?
Exercising. I've run, I think every day, just getting out and moving around, getting the blood flowing. One section of lyrics that stands out to me is, in this establishment, we're never established. And I'm, paraphrasing. It's from Wale. I think he says, in this establishment, we ain't never established or something. But basically, it's in this establishment, we're never established. And I think that is applicable certainly now but always, but definitely now it really resonates, this establishment of real estate, we're never established. So you've got to constantly, I'll speak for myself. I have to constantly be improving myself and working with the right team members and doing the stuff that I know every day I need to be doing in order to make those incremental improvements. And, I was listening to that on my run. It's from his Gifted album, outstanding album, but older album, outstanding album.
Sure.
And when I was listening to that, I think it was yesterday, I was like, in this establishment, we're never established. It's so true. It's so true. And so, having that mentality is not just now, but always. But, the interesting thing is people tend to downshift during times like this because, it's like, oh, well, I get a break now, and that's, I spend time with your loved ones. I get
Of
that.
course.
Like,
yeah,
embrace it, be present in the moment. But from a business standpoint, I remember in high school and maybe some in college where if I made a 0 on a paper, that would set me back tremendously with the grade. But if I just made like a 30 or a 40, then, at least I was getting some credit for what was going on. And if we treat it this time period like, oh man, I'm going to make some 0s on my business stuff, man, we're going so far back. But just imagine if we're getting like 80s and 90s when everyone else is getting 0s, how much farther ahead we're going to be in business during this period of time. So, I think just keeping that in mind too.
No, and I mean, this is exactly why we're doing this Reboot and Thrive, right? My encouragement to everybody, especially all my technology employees, entrepreneurs, is this is the time to put your best foot forward, to dig in, because I just know myself personally, having been through 2001, where, I lost my job opportunity because of 9/11, and I had to scrap for 8 months before I got my first job, did well. 2010, I'd lost 2 businesses in the Great Recession, but I focused on myself and I went with intent and said, I'm going to join a pre-IPO company. And now here I'm in 2020. I've got, an amazing wife, 2 businesses, 3 kids, 33 chickens on 3 acres. I want to lean into you. And this is where we're saying, don't get stuck, right? This is the time to move forward. And so this is a segue. Next week, the list of who we're going to have, I'm really excited. On Monday, I'm going to be joined by Amanda Nelson Varnell. Yes, she is my older sister, and she is amazing, to talk about dinner table magic, making dinner time family time. And you'll find that she has a passion, and I've done a swipe file of a lot of her stuff to really focus on having an amazing dinner table. She'll also talk a little bit about some food preparation techniques as well too. On Tuesday, we have Tom Merrick of the Bodyweight Warrior. He's British. He's got a cool accent, but he is going to show you how to thrive and move, starting a body weight workout. So while Joe, you may be getting your, interval training or your cardio training, he can show you how you do sets of push-ups and legs exercises and progressions. And he's created a 7-day YouTube routine follow along that you can do. Don't even have to think, just put it on and go. Wednesday is Fred Sassani. He's with Bodies by Design for Life, Mind Over Body. So that's perspective, persistence, and payoff in challenging times. Going to talk a lot about mindset. And then Amanda comes back on Thursday, homeschooling, creating an atmosphere of education with our 3 guys. Like, we need this. We're going a little crazy right now, but we're figuring this whole thing out. School started for us on Monday. And then Friday, Omar Almaina of Skippy Doo. It's a phenomenal website where he teaches parents, how do you play with your kids again? How do you take things around the house, create games, have fun, and engage with your kids? So thank you so much for joining today, Reboot and Thrive. Joe, I appreciate your time and all your information. We look forward to seeing you guys next week.
Thanks, everyone.